Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Justin Nielsen here with a breakdown of the action in today's session, where we saw an ugly market get uglier today, Justin.
That's about as best as you can say. Ugly, getting uglier. We'll take a look at some of the bright spots in the market, and there weren't very many, but we'll take a look at Quanta Services, World Wrestling Entertainment, and also HealthEquity.
All right, well, detailed analysis of those charts coming right at you. But first, let's take a look at the major indexes. Even though we don't want to look, it's hard to look. But let's take a look, Justin. The NASDAQ down 4.7% today. The S&P 500 down 3.9%. The Dow off by 2.8%. And the Russell 2000 looks like it was the hardest hit today, down about 5.1% by the close. So some brutal selling out there. We started getting some signs that things were making a turn for the worse last Thursday, though. So, waking up Monday morning, investors shouldn't be all too surprised that this is the hand that was dealt this morning.
Yeah, I mean, you might be surprised, but hopefully you're not hurt, because again, I think what we've been talking about is we had that sideways action over the last couple weeks, and our expectation was, look, this is great, for it to go sideways, but it's going to either break one way or the other, to the upside, and maybe we see a little bit more traction get gained from the rally, to the downside, and hey, that's a clear signal to back away. So we got that clear signal on Thursday. So really that was kind of the time to be backing away. And because we're individual investors, most of us, we have that flexibility to step aside. We don't have to be fully invested all the time like a lot of the mutual funds do. So because we don't have that mandate, and it's, we're our own bosses, we can just step aside and kind of watch from the sidelines with our popcorn when something like this happens. So it's a lot more comforting when you don't have a lot of money at risk and you see a market like today's action. Now, on the flip side, if you were thinking, if you were plunging in thinking, oh, this has got to be the bottom, well, this is a very important lesson of why we don't plunge in. It's one of those things where we like to let the market pull us in. And while it was doing that for a little while, we got some pretty clear signals. That's why we went to uptrend under pressure very quickly and then ended the week with market back in correction. And that's where we really try to back away, get more defensive, and certainly not be aggressive with our buying.
That's exactly right. And so the NASDAQ undercutting its April and May lows here. Going on over to the weekly chart, we've been talking about this 3 waves down concept, Justin. So it now looks like officially, as of this week, we are in a 3rd leg down here. We're not going to predict how this is going to play out, but if market history is our guide, we could see a leg down similar to the prior 2 that we saw. At least that's what the team has been talking about. Trading expert David Ryan, a protege of IBD founder Bill O'Neill, and a level that's pretty far down on this chart, Justin, that is now in focus, right around 10,000 or even below that. Why are we looking at that level?
Well, if you look at each one of these legs down and do a simple calculation, that's about where you would expect the next leg down to be if it kind of goes in a similar manner. So not only that, but you also have that support level that you're looking at the 9,838 level. So that does seem to be a fairly logical place. Now, look, there's a lot of things that can happen in the meantime, right? You could have some news come out. You could have either positive or negative that could influence things. We're going to be expecting some GDP numbers, that could be telling us whether we're in recession. There's a lot of stuff to look at here. So, not to mention, we've got the Fed coming out. Are they going to be a little bit more aggressive with their rate hikes? Maybe do a 75 basis point hike. So there's a lot of uncertainties out there. But at this point, the price and volume are your clear indicators. Forget all of the psychological stuff, forget the VIX, forget, stochastics, oversold, overbought, all of that. Just looking at the price and volume action that we've seen recently, we are in a bear market. The trend is down. And until we get more evidence that there's a bottom reached and the trend is potentially changing, and that we have some stocks that are working, it's really a market that we're going to be kind of backing away from, and again, sitting on the sidelines. Cash is a great position to have at this point. And yes, I know a lot of people are going to say, well, gosh, even cash kind of stinks when inflation is up over 8%. And that's true, but I'd much rather be in cash, getting, losing value with a 8% inflation rather than trying to make money where it's just not to be made and see a 10% destruction on top of that inflation.
And let's also take a look at the S&P 500 as well. Here on the weekly chart, we did see resistance right at that 10-week line, breaking lower below that sideways action as well in the 21-day line, as you mentioned, and now well below the low of the 20th of May here for the S&P. What levels might we be looking at here on the weekly chart?
Well, I think first stop is going to be that 3,500 level that you're right at. You know exactly where I'm going here, Allie. So that seems to be a level that could be a line in the sand. But beyond that, you're looking at around 3,400. Kind of if
we're looking at the pre-COVID high on the Nasdaq.
Exactly.
Pre-COVID high on the S&P.
Yeah, so those are some levels to look at. And again, it's not that you should be buying heavily if it gets to that level in anticipation. I personally like to wait until I see the strength come in, and then that can be action. And look, the fact that we just undercut the recent lows, that did officially kill this rally attempt, but I think the signs were already there. That's why we kind of moved last week to that uptrend under pressure and the correction, because we had the stocks breaking down. We had a lot of things just not making it, and today was just kind of a culmination of that. You had cryptocurrency not able to get a bid at all. It just seemed like a liquidity crunch there. You take a look at BITO, which is the new ProShares Bitcoin. I mean, that thing came out, unfortunately, at kind of the wrong time. It didn't participate in the upside, and it's just participating in the downside. And look, there could be a lot of people saying, well, this is the future. But again, I'm looking at the chart.
We're looking at the present.
Yeah, exactly. The present is saying, nah, not right now.
Right, exactly. And, you were saying with regard to the price and volume action on the major indexes being our signal, not waiting for that undercut of lows to go to uptrend under pressure, to go to correction. And also even before that weak action on Thursday and Friday, as you were also saying, Justin, underneath the surface, just stocks that were setting up nicely, breaking down. That was even happening on Wednesday. So we were seeing all of these clues underneath the surface that led us to the actions that we took last week.
Yeah, the things that were kind of working before, things that were decent setups. I mean, Amphastar Pharmaceuticals, AMPH. I mean, that was a pretty pattern, and then it just really tanked very close. I mean, you had a 20% drop in a day. So, WWE, which we'll talk about, I mean, that was a pretty decent setup. It was making some traction, then kind of reversed. It just seemed, and oil and gas, look, that's been kind of the one area you could count on here. And even that was starting to kind of, show some signs that it was getting a little tired. It's not to say that this is completely done, but there really was no place to hide today. I mean, just looking at the sectors, your best performing sector was XLP, which is the consumer staples, usually a defensive, and that was down 2% today. So again, there was no place to hide today.
Yeah, and so in addition to Bitcoin being, crypto being one of the big stories today, a continuing story that we are seeing play out is the rise in the 10-year Treasury yield, just absolutely skyrocketing today, Justin.
Yeah, I mean, remember, when we hit that 3% level for the 10-year Treasury yield, it was, a lot of wringing of hands, and then we, quickly backed away. Well, we got that support at the 50-day moving average line. And again, it's not that you are necessarily looking at the yields and thinking that the 50-day would make sense here, but it worked in this case. And we actually put TBT on Swing Trader. We have TMV. Both of these are short bonds, which again, remember, the bonds are going to go in the inverse proportion to the yields. So they act in a inverse relationship. So bonds are falling, yields are going up, and that that inverse ETF for either TBT or TMB gets you in the same direction as the yield. So
Right.
that was one way. So I guess I shouldn't say that there's nothing working. Yields, if you're in line with that, that's
Yeah.
one area that's working very well today.
Exactly. A couple of other areas to provide context. I'm just going to quickly go through here, Justin. Here's a look at the Dow undercutting its low. Russell 2000, which we mentioned, down 5%. Looks like it got close to its low from the 12th of May, but coming off in a big way. The first one to get above the 50-day line last week, but also the first to hit resistance there.
Yeah.
And let's also take a look at some growth ETFs like FFTY, down 5.8% today.
Yeah, so again, this is just, look, this is one where we typically are very growth oriented in that IBD 50 list, and growth is just not where it's at. So this is, I mean, you just look at the weekly chart here, and it just tells the story that growth has been out of favor for quite a while here, and is continuing to be so. I'd also like to take a look at BOUT, which is the IBD Breakout Opportunities Index. This is, again, something that's, Innovator uses this list, and this was holding up a little bit better. Part of that was because a lot of names in the oil and gas industry and the coal and energy were getting populated in this list, and there were some of those breakouts that were working, but here we are undercutting there too. So again, it's just a reminder that nothing is safe right now.
Exactly. And as you've mentioned several times, on the sidelines is the ideal place to be.
Yeah.
Let's take a look at some potential setups. Even though we're not actively trading stocks right now, many of us, at least to any significant degree, without properly managing risk, in things like TBT, TMB, as we mentioned, we are still keeping our watch lists fresh. So talk to us, Justin, about PWR here. We are seeing that relative strength line, blue dot, which is, these are the kinds of stocks that we want to be aware of, to have on our watch list in these massive sell-offs, because the ones that are holding up the best in this time, that could be the kinds of stocks that we see leading the market if and when eventually we do get that next leg higher.
Right. And, for as much as we're talking about those levels that the market could fall to, they don't need to.
Yeah.
We could get a follow-through day in as little as 4 days, so recognizing that, you always want to have kind of those stocks on your radar that could be setting up. And this is one that kind of jumped out at me. You look at a day like today where the indexes are down so much, and this is down only 0.5%. That's pretty impressive. And at this point, it's holding up so well compared to the market. So I think that's just notable. And it's a pattern. It's a pattern that we can recognize. This has got kind of a cup with a little handle formation here. And so if the market were to turn here, this is one that would be pretty quick that I'd be looking at to see, hey, is this something that is looking like it's turning with the market? But if the market's not turning, then I'm going to just, again, wait, watch, and still stay on the sideline. So there's nothing that's saying that you have to buy these patterns. Bill O'Neill, in his book, How to Make Money in Stocks, and many other books, The Successful Investor, pretty much any book he wrote, always caution people that, look, I'm talking about all these chart patterns that work great in terms of helping identify these market leaders before they make their major price moves. But there's a loud warning to the wise in a bear market. Don't expect any of this to work.
Exactly. So yes, heed that caution. All right, let's now take a look at a WWE. You mentioned earlier, Justin, it had an upside reversal today, but a big hit on Friday to the stock, down over 4% in some volume, albeit not sticking out completely like a sore thumb or anything here, but we did get that upside reversal today. So this seems like another watch list worthy stock.
Yeah, the upside reversal is what really impressed me about this one today. And the volume, there are some spikes on the downside, but we have some really nice spikes on the upside too.
Yeah.
So I think that the volume pattern here is overall pretty positive. And here again, we have one of those relative strength lines that's absolutely soaring, because this is holding up relatively well compared to the market. And so it's one of those where I kind of look at the technical action, and it makes me want to learn more about the story. What is it that they're doing that might might be getting investors' attention? Is it something that people are looking at? Is this something that people are going to be thinking about acquiring? Because there's a lot of brand that is
Mhm.
behind the WWE. I mean, they have. My son is crazy about the WWE 2K19 game. You've got the college aspect. Matt Galgani actually wrote a really nice article recently. I think it's on the homepage right now. So that's certainly worth checking out about, not only the licensing for the streaming, expanding their market internationally. So, it's not just about the technical action. You want to
Right.
kind of build a story behind it, but this technical action is sometimes what gets me started. Like, hey, this is something that I should look into and learn a little bit more about. And hopefully, when you see technical action like that, you can just quickly do a search in our archives and find a
Yes.
story that kind of helps explain a little bit of something exciting that's going on with the company.
Yeah, so true there, Justin. Okay, let's also take a look at HQY, Health Equity, up a little bit today, 1%, trading pretty tightly right here around the 50-day.
Yeah, I mean, a 1% gain when the market looks like it's, completely plummeting, and it's hovering right there at the 50-day moving average line. You look at this action of the last week, and you compare that to what happened in the market,
Yeah.
and I mean, it looks like this is a yawn, right? It's tight, it's fairly mild, and it's just not moving that much. So I think that's very interesting. This really kind of jumped out to me as well. Here we are above the 50-day moving average line again, having a gain, some volume behind that gain, and there's really not a lot of volume to the downside that is very worrisome here. You had a little bit at the bottom back in early May, but it's more than compensated for on the positive side. So again, it's always a balancing act, and you kind of look at the positives, you weigh that against the negatives, and overall, I think the pattern here is showing a lot of positives. So this is one that I don't think it's necessarily ready yet, especially if the market isn't moving. But it's certainly worth keeping an eye on because, this has struggled a little bit in 2021, but this could be something based on this prior uptrend that we saw to start this year and the fact that it's holding up pretty well, could be one to look at for the future.
And one note on the pattern, we're seeing a cut base on the daily. This is picking up a handle here on the weekly chart, Justin.
Yeah, and again, what I like about it is that tight action that's happening right now. So, sometimes it's good to look at both the weekly and the daily, because sometimes you'll see something on the weekly that you don't see on the daily, or vice versa. And throw in the monthly every now and then too, to kind of get a longer term perspective of where a stock has been, because that can help you, especially for some of these stocks that have had really big moves. It can kind of let you know, hey, where am I at in this cycle? And, is it really kind of due for a corrective phase? But all of those different time frames just help build that picture for you of what's going on with the stock.
Exactly. All right, everyone. Well, that is it for today. So to wrap, Justin, we're gonna stay positive, and the way that we can stay positive is by not getting hurt in this market.
Absolutely. It goes back to what Mr. Miyagi said, right? Best defense is no be there. And so if you can just avoid a lot of these really hard hit days and not get too excited about a single day that's up. This is something that you have to be very careful of in bear markets. You can have some very strong days. I mean, some of the biggest days on the NASDAQ composite, you look at the top 10 and they all happen during bear markets. So don't let one day entice you in to go in too heavy. You have to look at the overall pattern, and right now it is down.
Yep. So stick with us, because we are going to be there with you in this market, guiding you, our expert team, looking daily at the market action, at industry groups that we're seeing bubble up to the surface, or perhaps roll over in the rankings, stocks that are setting up, what the climate is like out there, other macro factors that we need to be aware of, portfolio management tips, and so much more. So not only do we tackle that on shows like this, our great coverage on investors.com, but also in detail every morning on IBD Live. So make sure you tune in tomorrow morning, investors.com/IBD Live, where we will have David Ryan join the show in his weekly Tuesday slot. So lots of great stuff coming ahead tomorrow, Justin.
Yeah, absolutely. And let's not forget Allie's YouTube channel. I just saw you poolside talking about the longer term perspective with mutual funds, which was great. I've got a
Yeah,
podcast that drops on Thursdays where we can do a little bit of a deeper dive with different guests. So, yeah, a
absolutely.
lot of content out there for folks to
Yeah,
get more education because, hey,
24/7.
doesn't mean that you have to be completely disengaged from the market. It could be a time for you to do a little bit more research, education, and maybe post analysis.
Absolutely, Justin. And who's coming up on the podcast this week?
Oh, you know what? It's from Lord Abbott. We're speaking with one of the portfolio
Oh,
managers at Lord
great.
Abbott, which is one of our favorite mutual funds that we cover. So it's going to be
That'll
great to
be
have him back on the show. Yeah.
fantastic. All right,
Mhm.
investors.com/podcast for that. Thank you, Justin. And thanks everyone for tuning in. We'll see you tomorrow morning and right back here after the close tomorrow. Bye, everyone.